$900 million go through 2019. 2018 saw $900 million as well, and then $1 million in 2017. So for transactions over $15 million, I thought this was a vital graph showing commercial real estate transactions of over $15 million that took place in every year. So starting back from 2017 all the way to 2020, varying degrees of levels of transactions of over $15 million. ACC kind of hovering around 10, but for whatever reason, 2021, we saw a ton of transactions of over $15 million take place, about 22. And again, this had a sizable impact on the yearly total for 2021 and the quarterly total for Q4 2021. And we'll get into those specific transactions for Q4 and for 2021 a little bit later on. This graph, a little bit hard to decipher, but I wanted to show the number of transactions per month throughout the various years. And the specific color I want you to try and focus on is that bright red color, which indicates 2021. And you can kind of see it falls in lines with some, I guess, normal transaction levels that you would see throughout previous years in Hamilton. As I mentioned, Q4 is a stronger quarter for the previous year, and it surpassed some of the highs that we typically see for this part of the year for this quarter. And as I mentioned previously, 2020 really impacted by the pandemic. You can see how transaction volume is really stymied in the first half of 2020, but it picked up in the latter half of that year. And that kind of pattern and that growth really kind of continued on into the year of 2021. Looking at where the dollars were going. So this looks at the specific asset classes, and we compare Q4 2020 of Q4 2021. So Q4 2021 is represented in the copper color. And we've seen investments almost in every field, really same patterns. It's going to be your industrials, it's going to be your multi-residentials, and then the lands associated with those sorts of developments as well. As you see, overall increases in every asset class compared to year over year. The only portion where it doesn't exceed the previous year was retail. And in both figures for 2021 and 2020, these are very impacted by single transactions. We had for 2020 transactions, Center Mall take place almost 1 year to the largest transaction that took place this year that I'll touch on. But Center Mall traded for $150 million in Q4 2020. And then we had a very large transaction take place of Eastgate Mall in Q4 2021. Looking through some further trends, land ICI, really every asset class kind of had its own impression from a really big transaction, but that's fairly typical with any year we see as well. Looking at values, as I mentioned, multi-residential and industrial, it's not exclusive to Hamilton by any means. It's almost a North American trend that you see. These are some of the strongest assets, and you're seeing values increase there because you're seeing huge demands for these two assets. You can see this is for Hamilton values, starting with Hamilton multi-residential. The average metric, we're going to look at this metric for dollar per unit. When you're looking at a multi-residential asset, was about $140,000 per unit in 2017, and that's, you've seen appreciated year over year throughout the years in Hamilton. Now it's approaching 200,000. It's about 170. And for industrial, the average dollar per square foot for an industrial asset in Hamilton was just below $100 in 2017, and it's really increased almost about $12 per year. Coming fast forwarding to 2021, and we're about $160 per square foot was the average that we're seeing for an industrial asset in Hamilton. So huge appreciations for both these asset classes. Looking at 2021 transactions, so this is for the year as a whole. We're going to look at the top 6 transactions that took place last year. As it just kind of funny enough shook out, the 3 largest transactions of the year actually took place in Q4. So we'll touch on that in the next slide. But the 6th largest transaction that took place was 1205 Glencaster. This is in Ancaster. A $34 million transaction purchased by Broccolini Construction. They're based out of Montreal, very, very big developer. Purchased it for 90 acres, which equals 383,000 an acre. As you can see, adjacent to the airport, so that's why it's a big part of a big factor of this transaction. It's actually a second purchase by Broccolini, right by the airport. The fifth largest transaction that took place was 140 Gardner Road East, and this is in Ancaster. $38 million purchased by Alberta Investment Management Corp. Purchased 172 acres, which equals to 220,000 an acre. As you can see on the right there, that's Highway 6, and it just kind of comes off of the 403, which you can kind of see in the top left corner. This is also very close to the Hamilton Airport, and it seems like in the last 3 years, maybe more, we've seen huge investments for industrial land in and around the airport. I think most famously, we've seen Panattoni purchase some land adjacent to the airport a couple years ago, and the Amazon Fulfillment Center, which is the main tenant there, should be ready this spring. So a lot of development is taking place in this area. And again, that really kind of impacts the land ICI figures that we just looked at. And then the fourth largest transaction that we saw was for a multi-residential property in downtown Hamilton at 125 Wellington Street North. Was purchased for $54 million by Equiton. Equiton, an investment company based out of Burlington, but as I understand it, have roots in Hamilton as well. 360 units was purchased at 150,000 a unit. So if we look at the average for 2021 was about 170,000. They got a fantastic deal on this, and I'm sure there's some value upside on this property as well. So the top three transactions that took place, and again, for 2021, this is also just happened to be in Q4, all these three transactions that we're going to go through. The third largest is 192 Houston Street at 181 John Street North. It's these two apartment buildings that you see centered in the image here. And then the smaller developed buildings in the opposite corners are also part of this purchase. $74 million roughly by Valeri Homes, 383 units, which puts that at $193,000 a unit. So about market price, maybe you would say they a little bit of an overpay given the size of the transaction, but phenomenal location, great asset. Valeri Homes, definitely more, I would say, famous for the development that they've done. I think maybe the most famous development in Hamilton is the Royal Connaught with Spalachi Homes. So really interested to see what they do with this, if it's just a standard income play, where they're just going to hold and improve the existing asset, or maybe down the line, who knows, maybe you'll see another development if that's a possibility on this site. Second largest transaction took place in Binbrook, 3105 Fletcher Road, $80 million purchase by Cachet Developments, almost 90 acres for almost 900,000 an acre. As you can see, there's Binbrook on the right. You can see how this kind of figures into the larger urban sprawl that we're seeing in development in this community of Hamilton. 900,000 an acre is a fantastic price. Usually you see, I would say about market for Hamilton is about $1.5, $1.7 million an acre for residential land of this sort of development. What leads me to believe to see them getting a deal is either maybe it's not zoned correctly right now. Maybe they don't have the infrastructure necessary to facilitate this development. And I think the actual size of the purchase as well also provides a bit of a discount. But anyway you slice it, we're going to need housing anywhere and everywhere in Hamilton. So really great buy for Cachet. And then, as I alluded to when I was talking about Center Mall, the biggest transaction that took place in last year was Eastgate Mall in Hamilton, 75 Centennial Parkway North, $88 million purchase by Hammer GP Services Corp. The mall is 511,000 square feet. And so at that purchase price is $172 a square foot. Huge purchase here. As I mentioned, Center Mall traded almost like literally a year and a day prior to Eastgate Mall. And when we want to look at that transaction, Center Mall was about 600,000 square feet, and it was a purchase at $221 a square foot. So obviously lesser value. Still, I'm sure there's intricacies with each deal, but if you just want to look at it, big malls comparisons, there's a little bit of a dip when you're acquiring Eastgate Mall. Really interesting thing about Eastgate Mall, when you want to compare it to Center Mall is that a couple things. One, there is a secondary plan that has been developed for the Centennial Parkway North road that is encouraging and allowing high density development on the residential side of things. And it's been proposed through the LRT that is going to be an anchor for one of the lines, or for the line for the LRT. So it would start at Eastgate Mall and it would end at McMaster University. So lots of potential for this site, even though it's currently just a pure retail play, but potential for residential and potential for a major transit hub at this location. So looking into the news for Q4, a lot of stuff, interesting things were taking place in this previous quarter too. So I just wanted to touch on some of the affordable housing developments that were announced. Q4, we have one on the mountain at 60 Caledon Avenue, which is the former Mountain Secondary School site. You can see a 262 unit development that's taking place there. 121 and 135 Mary Street. This is being done by Good Shepherd. This is located more closer to downtown Hamilton. And then 405 Main Street West. You may know that if you're a local in Hamilton, the former Wimpy's Diner on Main West is being proposed for almost a 300 unit affordable housing development. So lots of affordable housing proposals that took place in Q4. Other big news, the film district was announced by Eon Studio Group, and this is a rendering of what the district could look like. Right now, this is more commonly known as the Barton Tiffany lands, and it's just vacant industrial, but there's obviously a huge vision to what this could look like. They're deeming it a live work play where you would have film related industry, but in conjunction with everything else that makes the mixed community fantastic with residential. And this is really being facilitated by the new West Harbor GO station. It's not new in its construction, but new in its hourly transit towards Toronto, which is really helping make this a more livable community in Hamilton, or future livable community in Hamilton. So fantastic news to see for the film district, and especially so since Hamilton had a banner year for film. In 2021, as a spec article notes here, 152 productions took place in 2021, 816 permits, and that was a record. And the previous record was in 2019 of 141, and about $70 million in self-reported direct spending in Hamilton by film productions. Huge, huge film for Hamilton. Another big point of news in Q4 again, not that Hugh Peg Group is looking to put $500 million towards revitalizing the entertainment district in Hamilton, but that they partner with Oakview Group. And Oakview Group CEO is former CEO of MLSE, Tim Leiweke. They claim to be the world's largest arena development company. They've most recently redeveloped Seattle's arena where the Sonics used to play, and now it's the Seattle Kraken hockey team. And they're about to complete, or have completed just recently, the New York Islanders arena project. And it's been previously earmarked that $50 million is going to be earmarked towards the revitalization of the arena specifically in Hamilton, but Oakview Group has mentioned that they want to put at least $80 million into the revitalization of First Ontario Centre. So really interesting to see what comes of this arena. And I believe lastly, the big news that was announced in Q4 too is that council rejected urban boundary expansion by a vote of 13-3. The province has forecasted that Hamilton's population is going to grow by 236,000 people by 2051, which equals 820,000 people. And its staff was directed to draft a new official plan to reflect a no boundary expansion in January. I believe I haven't been able to see that yet. So really just to see what the new plan could look like. And there's obviously huge news to what Hamilton's going to look like in the future if this eventually becomes solidified. And then what changes come of that OP. And then in what areas, and then how does development get impacted in that regard? So big questions for the early stages of this year to look forward to. As for development that took place in Q4, I'm just going to go through four of them very quickly. This was announced at the DRP Design Review Panel. 537 King Street East by A-Game Investments, the 6-story mid-rise. This is located where, if you're familiar with Hamilton, the old Rebel Rock pub, on King Street, just outside of downtown Hamilton, pretty much in downtown Hamilton. 102 residences is being proposed at this condo. This is on the LRT line. So a lot of the LRT route has zoning that's called TOC or TO1, which is transit oriented corridor, to facilitate a little bit higher densities that are in conjunction with the LRT. Moving on, the second development that took place was 651 Queenstown. This is a condo that's being proposed actually very close to Eastgate Mall, 272 residences there, again on the LRT route too. 405 James Street North. This is in downtown Hamilton. It's a conglomeration of various partners: CHH, which is City Housing Hamilton; Frame and Sloker, which is a development company out of Mississauga; Melrose, Mars, DeSantis, and Inwell. And it's going to be a collection of various housing. So 47 units are going to be going to CHH, 117 by Inwell, and then almost 300 are going to be privately sold. And this is actually very close to the film district. You can see the bay in the background there. And this is located obviously on James Street North and very close to the West Harbour GO station. And then maybe the largest development that was announced was 75 James Street South by LaUna and Fengate, 34 stories at its highest, 644 units. And according to Councillor Farr, SPA approval is imminent, and they're targeting a 2025 target completion date. So fantastic news. And these aren't all the developments that were announced in Q4, but I think these were some of the ones that were noteworthy to mention and get on your radar. Looking at the previous 2021 year as a whole, the city reached $1 billion in building permits in 2021 at the halfway mark of 2021. Phenomenal, because Hamilton, as you kind of see, I didn't highlight it here, but the city has now reached 1 billion milestone 11 out of the past 12 years. So phenomenal to see that we reached 1 billion at the halfway point instead of obviously the end of the year in 2021. And what this ultimately resulted in is that Hamilton, for the first time ever, reached $2 billion in building permits for 2021. Phenomenal mark. And you can see total construction value up to and including October 20 when it was 59% resi, 40% industrial, commercial, institutional. We saw a 53% increase over the previous 3-year average for res. And we saw 86% increase for 3-year average in ICI, which is huge, huge, huge. And it really shows how there's a huge growth towards industrial, commercial, and institutional in Hamilton. Obviously, residential is a big factor, but you're seeing expedited growth in the commercial side of things in Hamilton, which is absolutely huge. And a big part of it is that airport district that we touched on just previously. We talked about this in Q3, but this is a huge, huge figure. I think really helps try and appreciate the amount of residential development that we're going to need to see and that we're going to see in the GTA and in the greater Hamilton area as well. This is by RLB, looking at cranes in various cities throughout North America, and by far and away, Toronto has a huge amount of cranes for the various developments that are going on in that city. And if you can just kind of think of all the cranes, if you drive through downtown Hamilton, we have about 9 or 10 right now. So you can compare it to Portland, where it has 15, or even Boston has 12. We're right up there with some of the larger cities in North America with at least our cranes. So looking again back to Q1 2021, Canadian home price gains accelerated sharply with Halifax and Hamilton leading charge. And Hamilton was one of the top cities with residential price increases that we saw last year. LRT, near certainty, as councillors voted to sign binding agreement, and that did take place. You see on the right there, there's the signing that took place. All-day GO train service was announced and confirmed, and that's what the West Harbour GO station I was just alluding to with the film district. That's currently happening right now. And so a lot of, as you saw, a lot happened in the previous Q4, and a lot of stuff happened in the previous year of 2021. So continuing to look at what kind of happened at the tail end of 2021 and cumulatively, what can we expect for 2022? But not commercial real estate, of course, but residential sales, very similar patterns that we're seeing for commercial real estate. So it was a record year for Hamilton, a RAB. This also takes into consideration for Burlington Homes. But sales decreased by 11% in December 2020. New listings decreased by 6%, but the average price for residential properties was $931,000, an increase of 27% year over year. And the inventory dropped to a further 0.4 months of inventory. The president of RAB was saying that we have never seen the months of inventory and active listings available this low before. So you're seeing very low supply right now, huge demand. And obviously you're seeing this factored into the values of homes right now. And this isn't specific to Hamilton or Burlington or Halton. This is what we're seeing really in a lot of places in Ontario and in Canada as well. This is a really, really interesting report that was conducted by CBRE in the latter half of 2021, interviewing or pushing out a survey towards lenders, commercial real estate lenders. And they looked at various cities throughout Canada, This is organized by, as you can see at the bottom right there, it's color coded based on the level of their interest. So that kind of green color that's on the left is strong interest, and it's followed by moderate interest and deal specific only, and then relationship specific only. And then the gray on the very right is no interest. Hamilton I've outlined in red there. So a little bit on the lower end when you can compare it to other cities. But if you look at it as interest as a whole, Hamilton is the second highest interest for lenders in Canada, next to Toronto, as only 10% had no interest. And that was the second lowest compared to GTA, which had 7% no interest. So there is level of activities. It's of varying degrees, of course, as you can see in the graph that's indicated by the survey. But I think it really shows that there's a lot of genuine interest, and we're seeing it in the previous information where we're seeing huge dollar volumes, huge transaction volumes for this previous year. And I think it's something we're going to continue to see for the years to come as well. And I think something to keep in mind is I think Hamilton has a very similar relationship to that of Victoria, where Hamilton is a direct benefit from Toronto and all the action that's happening there. And Victoria is experiencing something very similar with its relationship to Vancouver. That same report, I thought this was also very interesting, talking about alternatives. So not the standard asset classes that we looked at before of like multi-residential and industrial, but some alternatives that lenders were interested in. And the number one was privately owned student housing. Number two was life sciences. It's followed by data centers, mobile home sites, film studios, and co-working. And I think something to attribute to mobile home sites too is also potentially recreational facilities, as well as a lot of these also called MHCs, mobile home communities, are in some of the more rural areas of at least Ontario and the province, where you see campsites. And I think you're seeing a lot of investment towards that regard as well. And this is a fantastic graph by Remax that was conducted in the earlier half of 2021, but really showing, I'm not going to go through all of it, some 4 very popular cottage country areas, and just the price appreciations that we've seen in this, if you want to call this an alternative asset class, cottage or recreational use. But still, whether it's traditional housing or cottage housing, recreational housing, you're seeing appreciations in values and demand skyrocket in any asset class really related to residential. Going back to student housing, Hamilton really needs it, and you're seeing some big projects that are being in the pipeline for Hamilton, as McMaster is looking to build a almost 1,400 bed project right next to their campus on Main West. McMaster has 7,500 first-year students, but only 3,900 resident spaces. So even if they were to build 1,400 beds, that still does not hit the 7,500 first-year students. So there was still a need based on these numbers for first-year student housing. They're also building a graduate residence downtown Hamilton at Bay and King for it's going to be 30 stories, 644 beds. And they want to build for the 2023 academic year. So that's very soon. So it'll be interesting to see how that shakes out. We looked at this graph earlier in 2021 as well. This was done by Smart Prosperity Institute. And the green is McMaster University undergraduate, the blue is Mohawk College, and the pink is the graduates from McMaster. And just showing how in student enrollment internationally specifically has really increased throughout the years, and again, really kind of facilitates why we need housing specifically in Hamilton for student residential. Really interesting to see that Hamilton saw the largest jump in immigrant arrivals since 2016 this past September. Immigration as a whole was really impacted, obviously, due to COVID, but we saw a lot of immigration still jump because a lot of people got their permanent residency that were already here in the country. And something to keep in mind moving forward about immigration, how it's going to impact commercial real estate, how it's going to impact residential real estate, and how we can accommodate this new population that we're expecting to foresee in the future years once COVID kind of peters out, as Canada has a very aggressive immigration policy and really wants to accept record numbers of immigrants into the country. And there was a fantastic article that came out a few weeks ago by the Globe, just really kind of highlighting how Toronto and Montreal's populations are declining, how urban throughout the last couple of years, population growth has really been on the decrease, and specifically with Toronto, it's been decreasing. You've seen a lot of people move out of Toronto, but overall Toronto's population has been increasing really hugely by immigration, has really kind of stymied that decline. But when there isn't the level of immigration that we've typically seen, now you're seeing overall levels in Toronto really to dip. And we saw that this year. It says over the year ending July 1st, 2021, Toronto's population dropped by 16,000 people. Overall, the population in Canada's metro areas grew by just 0.5%. It was outpaced by expansion in rural areas for the first time on record. And just to show this graph here, so that maroon color shows growth in urban areas, and the blue is by rural areas. And the first time ever in 2020, when you don't have that same level of immigration throughout Toronto, it's the first time ever that rural areas outpass metropolitan areas that we saw in Canada. Over the most recent year, Toronto area had a net inter-provincial outflow of about 64,000, meaning 64,000 people more left Toronto for other parts of Ontario. And this is huge. As you can see in this graph here, the blue is Toronto. We saw 64,000 people leave in 2021. And you see this is a trend that's been kind of dating back since 2021, or excuse me, 2010. So where are they moving to? And it's actually, again, as the previous graph stated, it's rural areas. Kelowna grew 2.6%, which is the #1 in the country. And you see other areas like Oshawa and Halifax growing by 2.3 and 2%. Hamilton was referenced in this article, saying the average price of a detached home in the city is nearing $1 million, up 28% over the past year. And now you're seeing people in Hamilton having to go to Brantford or Paris or Niagara Falls, other areas, to see where they can buy a home. Then there's an article by Bank of Nova Scotia saying that comparative to other G7 countries, we're at a housing shortfall, and Ontario is up there with Alberta and Manitoba as provinces that really need housing as well. This was a graph that was done by Center for Urban Research and Land Development out of Ryerson University, looking at migration levels, so not immigration, but migration levels. So people who are already here moving around the province, and Durham was #1, but see the change in Hamilton's population that I've highlighted there. So the darker blue is 2021 and 2021, and the light blue is the average for 2015 to 2019. You can see a huge jump in Hamilton for people moving from the province to Hamilton. And it's almost 4,000 people moved in the last 2 years to Hamilton. That's a huge amount when you think of like what that looks like for a specific condo unit or even a house. And that's so for further providing further pressure on Hamilton's residential market. So a lot of information there. So again, just to kind of recap and try and think back of what we just listened to and what can we expect for 2022. And it's kind of similar to what we had in 2021. Hopefully it's a little bit more cheery, and with hopefully, knock on wood, that the pandemic is going to start to fizzle out and we'll start to get back to some normalcy. But overall, I think you're going to see both in resi side and both in the commercial side, transaction numbers are going to skyrocket, continue to keep going up. Activity is going to keep going up. And specifically with Hamilton, with the patterns that we've seen, I think larger transactions are indicating that you're seeing values increase, but also you're seeing bigger attention. As I mentioned, Broccoli purchased their second property here. Aimco, huge player, purchased the property here. Panettone purchased twice as well. So it's really encouraging to see repeat purchases from investors and groups outside of Hamilton, and even in some cases the province. And I think that's going to be a trend that you're going to continue to see. And with this further activity, it's going to make it more difficult to acquire, which is again providing further pressure on values. Hamilton and other surrounding Toronto markets are going to witness continued real estate lifts, and this is both on the resi and commercial side with that demand. Industrial and multi-residential going to continue seeing their values increase in 2022. This is from a stat from CMHC, 0.3% availability rate for Hamilton condo quality apartments, so huge demand for that. And in industrial is 0.8% availability rate for Hamilton industrial, and that's from the Collier's latest report. And you're seeing below 1% in a lot of places throughout Ontario and London and Kitchener and in Toronto as well. And it's just going to continue to be compressed, and that's why you can't really build these industrial developments at the airport quick enough. And that's why you're seeing an 80% increase over a 3-year average in Hamilton for development permits in industrial, commercial, and institutional. Office hopefully starts to make a gradual comeback now, with things starting to hopefully get back in the right direction. Specifically, I think you're going to start seeing, as that first lender report looked to the alternatives, medical, life science, and tech, things or areas of industry where you can't really work from home as much. I think those we're going to see first investments into the office sector as well. And then retail, unfortunately, I think you're going to start to see continue losing value in this regard as people are getting more and more comfortable being able to work from home, shop from home now. And I think you're going to have to see, at least for the larger assets for retail, like your center malls, like your Eastgate Mall, I think you're going to see continuation of pivoting into supplemental uses to diversify and reduce your exposure to strictly retail. You're going to see residential, an asset class that's obviously doing phenomenal. and we need lots of housing. So again, Centennial Parkway has a secondary plan. Maybe we'll see some residential there. And I think you're going to continue to see lots of existing retail plazas going to have to incorporate different levels of asset classes there. Land values are going to inherently increase. And then I think it doesn't matter how you slice it, any residential investment is, you're going to see huge investments in that regard, whether it's traditional housing, condominiums, where it's a bit more affordable, rentals, something we've never seen really huge investments into in the last 10 years or so. You're going to see investments into that. Student residences, LTCs, long-term care facilities, and cottages as well. Big talk about the interest rate hikes. I think this is an announcement by BOC any day now, really. Will it have an impact? I think so. I think the stress test as well, but I don't think it will have a sizable impact. A lot of people are worried about. I think the pressures of immigration, the needs of housing is, at least in Hamilton and the GHA and the GTA, is too great to really see to have interest rate hikes really put a sizable dent into the housing pressures and real estate values that we've been witnessing for the last several years. With that, I think we're going to see a fundamental shift of really rezoning single family housing, especially in existing downtowns. I think you're going to see this firstly in Toronto, where you do see a lot of things kind of really first happen there and then kind of gets adopted throughout various cities like Hamilton throughout the country. They really started laneway housing. Now you're seeing secondary suites. I think you're going to have to see even be a little bit more creative, maybe add some further densities, especially in the case of Hamilton, where you're not expanding your urban boundary, or that's the path forward. Are we going to see new dent limits to heights traditionally in the downtown? Is the transit-oriented corridor where the LRT is supposed to go? Is that going to see further densification? And I think these are going to be things that we're going to have to start to think about, especially in the case for Hamilton, where you're not expanding your urban boundary. And with all this, the big ones, again, multi-residential industrial, we're seeing phenomenal investment in that because of phenomenal demand. And we're going to see investments in growing in alternatives such as student residences, specifically in Hamilton, film specifically in Hamilton, and mobile home communities, which is part of that recreational investment that we're chatting about with the RE/MAX report up there earlier on. So overall, I think we're going to see a huge year for 2022. It's going to be tough to hit $1.6 billion for total commercial real estate volume. So maybe we'll do it. Who knows? Like, it was a phenomenal year for 1.6. I think maybe we'll hit for 2023 somewhere between 1.2 and 1.6. But if we have the continued attraction, if things are working out well through the pandemic, who knows? Maybe we can surpass $1.6 billion. Didn't think we're going to hit $2 billion for permit volumes for Hamilton, and it was by far and away blew out the previous records for $1 billion that we saw in Hamilton. But overall, I don't think anyway it shakes out. I think you're going to see a positive year for 2023 for commercial real estate. Yeah, good luck, and hopefully things work out with the pandemic as well. This is the end of the presentation. Again, thank you for joining. I left my email right here since we're kind of going past the half-hour limit that we set aside for this presentation. If you have any questions, please feel free to send me an email. This presentation will be on our YouTube channel as well if you want to further view it in the future, or if you even want to share it to someone who wasn't able to attend today, but you're more than welcome to share. And again, you can use my email if you have any questions about the presentation, or if you have any questions in general about Hamilton commercial real estate. Happy to share my insight. So once again, my name is Alex Milovich from Forge & Foster, and thank you for attending Forge & Foster's Q4 Hamilton Market Update.